Hello and greetings, Forex Academy subscribers. Thank you for continuing on this series. If you watched our previous videos that I did on trading psychology, we're flowing right into a trading methodology and money management. And this really goes along with, and in fact, I was struggling to determine how to compile the psychology and the methodology together because they are very integrated, yet they're very separate topics because I mean, really, what we're dealing with in the psychology component is the internal design of your own responses to market of the market. And then when we get into trading methodology, we're discussing really the system and the form and the theory that you would use to trade the markets. But there is also attached to that a lot of the failure or successes associated is due to the psychology of trading. So in this series of videos, we are going to be going over the trading methodologies. And so this is kind of an interesting way to look at how we would view a tradable market and how we would get into trading markets. We really have to identify kind of a time frame and what kind of strategy you're going to use. But before we get into that, we really need to look at what trading methodology really is. Now, I want to take a look at this two charts here, okay? Can you tell just by looking what instrument this is? Is this a ETF? Is this a stock? Is this a Forex pair? Excuse me, or a cryptocurrency pair? Can you tell? Probably not. Can you tell what time frame this is? Are these daily candlesticks? Are these 1 minute candlesticks? Are they 45-minute candlesticks, hourly candlesticks? Can you tell just by looking? Probably not. Probably not. And really, it doesn't matter. I could tell you, but it doesn't matter. I'll tell you that nothing on the screen is over a daily chart or under a 30-minute chart. All right, and the instruments are both a Forex pair. But this could look like any other chart, okay? It does not really matter. The point is that market structure, as you've probably, if you're coming into these videos brand new, if you're not familiar with a lot of how the theory of how technical analysis works and the analysis of markets and understanding patterns, patterns appear similarly. The same patterns appear frequently on every single time frame. So the same patterns that show up in a 5-minute chart are going to show up on a 1-day chart or a 5-day chart or a 5-month chart. They're all going to have the same type of patterns that we recognize. So it doesn't really matter the time frame. The patterns are going to show up. And so the time frame doesn't really matter when you're trading the structure, but it does matter when you're trading a method. We need to go over, though, some of the common problems associated with trading in general and the trading methodologies is paralysis by analysis, ignoring entry and exit signals, and overtrading. Now, paralysis by analysis, that is essentially where you're overanalyzing your charts. You are waiting for the perfect entry and exits. You have too many tools on your screen. You're just waiting to be sure, okay? You probably have a screen that just has a slew of data on there. You probably have an RSI, a MACD, a stochastic RSI. You have a squeeze indicator. You have all of those. You have like 3 different volume indicators. Then on your chart, you have a 200, 150, and 30, and 20, and 5-day moving average. And then you have some Gann fans on there. Then you have multiple different types of pivots, some subjective and static and dynamic supports and resistance lines. You're waiting for the perfect exit or entry signal based on a whole crap ton of data, which the more tools that you utilize to determine an entry, the lower the probability of finding the perfect entry you're going to have. Okay, if you're waiting for 8 indicators to tell you whether it's okay to take a trade, you are not going to have that many trades and you're not going to find very many quote-unquote perfect entries. So too many tools and waiting to be sure. A lot of the waiting to be sure part is a component of the psychological component of trading. But paralysis by analysis is a very, very common thing that traders go through. Ignoring entry and exit signals. This is a common thing too. This kind of flows into the paralysis by analysis. But when you're feeling unsure about whether you should take a trade or not, you don't trust your system. You have these carryover emotions. And if you watched or if you participated in the psychology series, the carryover is a big deal for traders. It happens to new traders. It happens to professional traders and veteran traders. But if you've experienced some really big loss and loss of your own money, it's hard to go back into that another trade and be totally neutral. Humans aren't like that. We're not like that. We can't just take a trade, take a loss, and then just not feel like, oh, okay, that just happened. Okay, it gets easier as you trade longer, but if you're a new trader, certainly your conviction and your belief in your system, it's amazing like you can have a winning trade, and this is always humans. We're so insecure, but we could have a winning trade, and we could have a series of winning trades and still not trust our system. Okay, we could have a confirmation of a series of high probability wins that actually end up winning because the probabilities were correct, or they worked out in our favor, and that's still not enough for us to believe the system. But damn it, if we get one loss, big or small, we're convinced that system doesn't work. It's like, well, I don't care if I had 12 wins. I've had 2 losses. This system doesn't work. Or if you've just had a series of small losses or big losses, it's hard to go back into another trade and feel okay that the method you're using is going to work again. All right? And greed and fear. All right? That falls into the category of the carryover. We get afraid. We get really greedy and hopeful. We can ignore, and I'm not saying ignoring an entry exit signals by like not taking them late. Oftentimes we can ignore an entry by taking it early. We kind of jump the gun where we're like, you know what? I think this will happen. Boom. Instead of waiting for the confirmation that you need, you'll take an entry and exit early. Those are common problems. Over trading. Oh man, I tell you what, there are few things that destroy new trader accounts more than over trading. Okay? Averaging down, I'm putting that in here instead of keeping that as a separate issue. But averaging down is where you take, averaging down is sometimes used in, it's often used in like, dollar cost averaging. That's an investment term where no matter what the price of something is, you're just going to keep buying it. People who manage retirement portfolios, they do dollar cost averaging. But for day traders or traders, averaging down is basically saying you're adding to a losing trade. Okay? You have a trade that's going against your position, and you decide, I think it's going to turn around here, so I'll buy back in more. All right, and then it goes against you again, and you're like, I'll buy back in more. And then it kind of turns into a snowball where you have so much of your capital committed that you just decide you're going to gamble and say, okay, if I go all in right now, I'll feel better if I recover some of my loss or a break even, that'll be good enough. And often that doesn't work. Averaging down has been the number one reason for a lot of traders' accounts disappearing, is because they can't accept the loss and they end up averaging down or over trading through averaging down. Revenge trading, if you're not familiar with what that is, or if you either know what this is or you don't know what this is. If you haven't been trading very long, you probably don't know what this is. If you've been trading for really any length of time, you probably know what revenge trading is. Revenge trading isn't just associated with anger; it's also associated with fear. You have a trade, it loses money, and you decide, oh my God, I got to get that back. You take another trade, and it goes against you, and then eventually your brain goes into this fight or flight mode, and you totally lose any concept of rational thinking and logic, and all you do is you just throw yourself into these trades randomly, hoping that they're going to come back into profit and that you're going to be able to to get back what you already lost. Revenge trading is also a number one reason why people lose money starting out trading. Staring at your screen all day. Yep. If you're a new trader and you just stare at the screen all day, I guarantee you're going to overtrade, and I guarantee you're going to let the feelings of fear and anxiety take control of your trading. You could spend 3 months in a trading class learning all the right methods, the right entries, the rules for a system, and you could practice them in a demo account all day long, or maybe even for a year, keeping a trade journal of your demo account and feel pretty good about it. But there is no replacement for risking your money and losing it. There's none. All right? And so if you sit there and you're staring at that chart with your position open the whole time, you are going to be in danger of overtrading, because you'll enter and exit frequently. Every single tick of a candlestick that goes against the direction or you think may go in a different direction, you are convincing yourself that's time to leave that trade. Oh, I got to exit. I can't just, you just don't want to wait it out. You can't stand to wait it out. You just work yourself up to a point where you just are exiting and entering trades all the time. You're going, okay, this is a good exit. Okay, I'm going to exit. Okay, I exit. Okay, now this is a good entry. I'm going to take this entry, and then it's like, okay, I'll take a little profit here. Actually, it's a loss. And you just keep going back and forth, and it makes no damn sense. Overtrading is terrible for new traders. It's a bad habit that happens, and it's a difficult one to break. All right? So until you master yourself, you will all fall victims to never believing in a system or method that works because you sabotage it. Okay? William Delbert Gann, he wrote, and I believe it was his Master Commodities course, he wrote that, he could give you his system and that his students would still fail because they have not mastered what he called it the human factor, the human condition. Because I tell you, there are a lot of systems out there that have been around for years that work. Not all of them work anymore, but there's quite a few that do work. The Ichimoku system comes to mind. That's what I used to learn to become profitable. That system works if you follow it. But when somebody tries to trade a system or a method and they end up losing, they blame that system or the method. And very rarely do they blame themselves. All right? Very rarely does a new trader believe that he or she is the reason for the loss of a trade or the loss of their money. It's always the wrong system or the wrong method. And so then they go into education overload where they're doing everything they can to learn about this indicator or that indicator or this combination and that combination, or I need to trade it on this time frame or this kind of a method. And eventually people get desperate enough where they're going out and buying signal services and these auto trading and trade copying, and these things don't work. They don't make money. It's just, you're just avoiding the real issue, and that is you. And that gets talked about a lot in our trading psychology series of videos that I did. And I would really encourage all of you. That is the most important thing. If you want to learn how to become a successful trader, learning about you is how you're going to do it. Because no method or strategy is going to help you deal with the loss of money, no matter how highly probable that system is. Okay, so things to know, because in our next videos we're going to go over a lot of the methodologies and some of the definitions of those, and so things to know before you start actually trading a method is you need to know your market. Know what you're trading, okay? I know we're Forex Academy, but this really applies to anything, whether you're trading futures, cryptocurrencies, equities, ETFs, indexes, commodities, or Forex. You need to know the market you are trading. You need to have an understanding of what probability is. And I don't mean you need to have like a quantitative, super duper advanced to the 1,000th percent probable probability. You can just, like, I myself, I just make a little kind of note in my head, like, okay, I've got this criteria for an entry, and I rate this one at like a 5 out of 10, and this one at a 6 out of 10, and that, that's how I kind of rate my probability system. It's a little different, but understand the probability of a trade you're about to enter. Okay, know the news and the fundamentals of the underlying instrument. Know the aggregate environment. Like currently, at the time of this video, this is the 18th of June 2018. We've got a lot of stuff going on with the trade tariffs in the United States, and we've got just, I don't know, there's a whole, if you're watching this in the past, then you know what has happened already. So there's a whole lot of volatility that goes on with a lot of these things. So know the environment you're in. Know your risk, all right? Know how much money you are willing to risk. And we're going to get into that with the money management component. But you need to know what your risk tolerance is, okay? And then you need to know your time frame. Because trading on a specific time frame will help limit you to making a lot of the mistakes that are associated with over trading and paralysis by analysis. Now, as you get more advanced and more used to trading and the losses that are associated, of course, you're probably going to use like MTFL, multiple time frame analysis. That's stuff that's a more advanced feature of trading. People don't think it is, but it really is. So, keeping yourself to just a time frame to trade is going to help a lot. That's what you need to know. So, thank you for watching this first video, and I look forward to talking with you in my future videos with you. Thank you.